Gold and silver prices are down significantly, as well are most other metals, and we're going to take a look why that is in today's video. Welcome back, guys, to the Independent Experience. I'm IndyXP Bullion, and this is the morning market wake-up call for Friday, February 26th, 2021. Like I said, we've had some big losses. Let's go ahead and take a look and see where we're starting today off at. Gold is down, currently at $1768.25. Silver is down significantly at $26.85. That gives us a ratio of 65.86. Platinum is down, currently at $12.0470. Palladium is down significantly at $23.80.86. And rhodium is actually up $500 from yesterday, currently at $24,500. Copper in the base metals. Copper is at $4.26. Nickel is at $8.66. Aluminum flirted with $1 overnight, and it's back down. It's currently at 99 cents. Zinc is at $1.29. Lead is at 95 cents. Barrels of crude oil are down somewhat, currently at 62.27. We had big losses on Wall Street yesterday. The Dow was down 559 points at 31,402.01. The Nasdaq was down 478 points at 13,119.43. And the S&P 500 was down 96 points at 3829.34. The U.S. dollar index is trying to recover actually somewhat. It's at 90.57 currently. If you guys trade in Bitcoin, we had a loss of a day yesterday, but we are seeing a comeback. And the Bitcoin wallet is thinking about it. Currently, Bitcoin is at 46,955.94. And if you happen to exchange gold back today, whether that be the Utah or the Nevadan, those are exchanging for $3.16. I do expect that to go down slightly once their market opens. Today, we are going to be taking a look at an editorial piece from Rajan Dal over at Kitco News in regards to the precious metals markets. This is titled, "Interest Rates Are Playing Havoc with the Gold Market, but Where is This Going?" Since the pandemic hit the markets in the world, central banks and governments felt like they had no choice but to support the markets and economies, flooding it with cheap money in the form of QE or lending with an ultra low interest rate. You can make up your own mind. You can make your own mind up and decide if this has caused a bubble or not. But at the moment, the repricing is taking place. Gold had a great run after the pandemic set in and moved from $14.51 an ounce to an all-time high of $20.75 an ounce. Since then, the price has retracted, and we hover around the $1,800 mark level which seems to be fair considering the circumstances we find ourselves in. This article was written overnight. Was posted on Kitco this morning. The interest rates markets offer something gold doesn't, and that is security of yield. If inflation is motoring ahead and you want to invest $1 million in bonds, you can get 1.5% from a 10-year Treasury Bond. If you put that same amount of money into gold, you get the ultimate safe haven, but you do not get the yield. Investors have been on the hunt for yield for a long time, and now money markets are pricing in the fact that the Fed may have to tamper or tighten monetary policy within a 2 to 10 year time horizon. This makes absolute sense if you feel stock markets are in a bubble and the companies in the U.S. need to price in rising costs due to inflation and the higher interest rates. You will diversify. This guy's not English, so it's a little bit of broken English in this one. Apologize. Why choose treasuries over gold? J.P. Morgan once said, "Gold is money and everything else is credit." This is true more today than any other time in our lives. If inflation does reach 2%, which is the Fed target, and you are getting 1.5% 10 yield on your money is moving backwards over that period of time. The carry cost for holding dollars in cash could be even worse. Holding gold in your portfolio could be prudent as it has traditionally been used as the inflation hedge. The issue is that you are subject to the price fluctuations, and that if the Fed does indeed decide to tamper or tighten, you could lose out. Once this move has balanced out and found its fair value, we could see gold move back into higher levels. If at the moment the financial markets are getting used to the fact that the Fed may need to slow down as growth improves. We may well see a bumper Q2 or Q3 growth figures, but the cost of growth for business will be more. Also, if we really think that the Fed will stop pumping the markets with liquidity, I think not. The governments have committed to helping the economy, and there is now a Democrat government in America. Let's take a look at the stock situation. In relative terms, interest rates are still very low, and if we see inflation push higher, like many analysts are expecting, gold could make a comeback. So, lots of broken English there in that article. I think they were trying to really push that one out for the presses this morning. So, I apologize for the choppiness of that article, but it sounds like the Fed is tampering with the rates, and that's what's causing our precious metal markets to go down. In overnight trade, we did see some losses yesterday, but we did see some significant ones overnight in overseas trading. So it'll be interesting to see what happens once the U.S. markets open, come around to 8:30, 9 o'clock this morning. So what do you guys think? I'd be interested to hear what you have to say on this topic. Do you think that we're going to continue to see gold prices and silver prices dip lower in the near term? Or do you think that once the U.S. markets start opening up that we're going to see things turn around? Let me know down in the comments. Be interested to hear what you have to say. All right, guys. I hope. Where are we going? I appreciate every single one of you. If you happen to appreciate Old NDXP Bullion, do me a favor, hit the thumbs up button for me. It helps me out immensely. If you happen to be new to the independent experience and you want to keep up to date on when all the latest and greatest content comes out, make sure you hit the subscribe and jingle bell right there in the corner, big bong, so you can stay notified of when the new content comes out. Of course, we're going to pop the box up on this side of the screen. This is the gateway to the back catalog. You can start clicking through these videos at your heart's content at the end of this one. Guys, I've been NDXP Bullion from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.